You are never going to look at your bank the same way after this video. Not because of what banks do to your money, but because of what they do to your mind. Right now, your bank knows more about your psychology than your closest friend does. They know when you are stressed. They know when you are desperate. They know the exact moment your willpower is lowest. And they have systems built specifically to reach you at that moment. This is not a theory. This is not a conspiracy. This is documented, published, proven. And by the end of this video, you will understand exactly how the system works. And more importantly, how to make it work for you instead of against you. Let me start with something that happened in 2008. The global financial crisis. Millions of Americans lost their homes, lost their savings, lost everything. And when the dust settled, the United States government gave the banks $700 billion. Not the people who lost their homes, the banks. And within 2 years, those same banks were reporting record profits again, while the people they had destroyed were still rebuilding their lives. How does that happen? How does a system designed to serve people end up serving itself at the expense of the very people it was built for? The answer is not greed. Greed is too simple. The answer is psychology. Here is the first thing banks do to control your mind. They make debt feel like opportunity. In 1950, the first modern credit card was introduced, the Diners Club card. It was marketed not as debt, but as freedom, convenience, status, power. You do not have to wait to buy something you want. You can have it now, pay later. And the human brain, which is wired to prefer immediate rewards over future consequences, said yes, enthusiastically. Today, the average American carries $4,700 in credit card debt, at an average interest rate of 22%. Do you know what 22% interest means? If you carry $4,700 in credit card debt, and you only make minimum payments, it will take you 32 years to pay it off. And you will pay nearly $14,000 total for $4,700 worth of stuff, most of which you cannot even remember buying. The bank did not steal that money. You handed it over because they made debt feel like freedom. Here is the second thing banks do. They hide the true cost of everything. In 2009, behavioral economist Richard Thaler won the Nobel Prize for proving something banks had known for decades. When people pay with cash, they feel the pain of spending. It is called the pain of paying. Physically handing over money activates the same part of your brain that processes physical pain. So banks created credit cards. Tap to pay, click to buy, one-touch checkout. Every single friction point removed, because every moment of friction is a moment your brain might say, wait, do I actually need this? Remove the friction, and the brain never asks the question. Amazon patented one-click buying specifically for this reason. Not for convenience, for psychology. Here is the third thing banks do. They use your own data against you. In 2012, a financial analyst at a major U.S. bank published internal research. The research showed that banks could predict, with stunning accuracy, which customers were about to experience financial difficulty. Not from their account balance, from their spending patterns. People who started buying cheaper groceries. People who started making smaller purchases. People who stopped going to restaurants. These behavioral signals showed up in the data weeks before the person even realized they were in trouble. And what did the bank do with this information? Did they reach out to help? Did they offer lower interest rates to struggling customers? No, they used it to time their credit card offers, their loan offers, their overdraft promotions, reaching people at their most financially vulnerable moment, with products designed to pull them deeper into debt. Here is the fourth thing, and this one is the most insidious of all. Banks make saving feel small and borrowing feel large. Think about the last time you checked your savings account. Your bank probably showed you a small number, growing slowly, maybe earning 0.5% interest per year. Now think about the last time you saw a bank advertisement. What did it show you? A new car, a dream home, a vacation. Buy now, finance now, live now. The messaging around debt is always aspirational. Big, exciting, possible. The messaging around saving is always modest. Small, slow, boring. This is not an accident. A customer who saves money costs the bank money. A customer who borrows money makes the bank money. So the entire psychological environment of banking is designed to make you feel like saving is small and borrowing is the path to the life you actually want. Now here is the number that should make you angry. The top 6 banks in the United States earned over $120 billion in profit last year. Not revenue, profit. $120 billion. From interest, from fees, from penalties, from the gap between what they pay you on savings and what they charge you on debt. They pay you 0.5% to hold your money. They charge you 22% to lend it back to you. That gap is $120 billion per year, coming directly out of the pockets of ordinary Americans. But here is what they do not want you to know. Every single psychological trick they use on you can be reversed. And when you reverse them, you stop being the product and start being the player. Reversal number 1. Make debt feel painful again. Delete your saved card details from every website. Use cash for discretionary spending for 30 days. The research is clear. People who use cash spend an average of 15 to 20% less than people who use cards. Because the pain of paying is actually your brain protecting you. Stop numbing it. Reversal number 2. Make saving feel large. Open a separate high-yield savings account. Not with your main bank. Somewhere you have to deliberately go to access it. Name it something that matters to you. Freedom Fund, Future Fund, Escape Fund. Reversal number 3. Understand the real cost of every purchase. Before any significant purchase, calculate the true cost in hours of your life. If you earn $20 an hour, and something costs $200, costs you 10 hours of your life, not $200. Research shows that named savings accounts are 42% less likely to be rated for impulse purchases, because your brain attaches identity to the goal, and identity is always stronger than impulse. Reversal number 3. Understand the real cost of every purchase. Before any significant purchase, calculate the true cost in hours of your life. If you earn $20 an hour, and something costs $200, costs you 10 hours of your life, not $200. 10 hours. When you frame spending in time instead of money, your brain evaluates it completely differently. Because time is the one thing you know you can never get back. The banks have spent decades building systems to get inside your mind. You just spent 8 minutes learning how those systems work. Now here is your challenge. Pick one of the 3 reversals I just gave you. Just one. And start it today. Not tomorrow. Not next week. Today. Because every day you wait is another day the system runs exactly as the banks designed it. With you on the losing side. If this opened your eyes to something you never noticed before, share this video right now with someone you care about. Because somewhere today, someone who matters to you is being quietly drained by a system they do not even know exists, and you just learned how to warn them. Drop a comment below and tell me which of the 3 reversals you are starting today. I read every single comment. And subscribe to PsychoWealth and hit that bell. Because next week we are going even deeper into a psychological system so embedded in your daily life that most people defend it even as it destroys their financial future. You do not want to miss it. This is PsychoWealth, and this is just the beginning.